Thank you for joining us for All Things Real Estate. Now here are your hosts, Brad Avergon and Gary Kelly.
Hi, this is Gary Kelly with Lamakia Realty, and I am joined as always by the debonair
Brad Avergon with Fairway Independent Mortgage. How you doing, Gary?
I am well, Brad. How are you?
I am well, thank you.
You know, one of the questions I get asked a lot when I go to the diner or wherever I go around town is, and everyone always leans in, when's the crash? Okay. And what the frick are you talking about? Where's the crash? Well, you know there's going to be one. You know, with the way things are, there's going to have to be a big crash. What do you think about that, Brad?
You remember the children's story? This, I don't know, Henny Penny and the sky is falling. The sky is falling.
Yeah.
You know what I think about it? I think that bad news sells easier than good news. That's what I think. I understand. In fairness, I do understand people's fears. You know, because those that were around in 2008 and saw what happened and said, "Gosh, that was crazy," and I don't want to be part of that. But things are so different now. I mean, they're so different. It's like night and day. I just don't see the crash happening. What do you think, Gary? You see a crash?
I don't think we're going to see a crash. I don't think we're going to see anything resembling a crash. I was around back in the days when things crashed, 2008 in particular. And, you know, we had people that were trying to sell homes and they were upside down, which meant they owed more than the house would get on the marketplace. And that's where the whole thing of buying or selling the house at a short sale came in.
Yeah.
And it was ugly. I was doing investment real estate with three other guys. So there was four of us over in the city of Sin, Lynn, city of Sin. Never go out the way you went in. And part of that was one of the partners started to struggle, the stress, the pressure. And then another one started to struggle. And it was a crushing time. And so I saw people, strong people, just get crushed mentally.
Yeah.
You know, in practice, we made many business decisions that were good business decisions, and everyone lived to talk about another day. But at the time, going through it, a lot of sleepless nights, and I feel that people, you know, there's still PTSD from that.
Yeah, and
I think they're waiting for that to happen again, and I just don't see it happening right now.
And let me give some logic behind that, some things that other than a gut feeling, right? That why is it not going to happening? So in the crash of 2008, I was doing mortgage lending as well at that time, and I have to tell you, things have drastically changed as a lender who would lend money that were purchasing homes. So two of the things that were different back then is back then, number one, there was all these products that were commonly referred to as liar loans or no income verification, no asset verification, just sign on the dotted line. Basically, if you could fog a mirror, you could get a mortgage. So that was the first thing. So prior to 2008, you could buy a property and really not be qualified to purchase it. And you could buy multiple properties that way. And the reason that they did that is because the market had a strong appetite for it, and they felt that it was going to be that values were just going to continue to skyrocket and never end, and it was all going to be fantastic. Well, that's not at all what happened. And so you had a lot of people when the market shifted, and it shifted for a number of different reasons, but when the market shifted, a lot of people said, well, gosh, you know, I not only don't want, you know, I can't sell this property for what I owe on it. I only put very little, if anything, down. I'm going to throw the keys back to the bank. And that created, number one, a lot of inventory on the market. That's not done now. Those programs are long gone. And there was a lot of legislation passed, so that would never happen again. Now, as a lender, we are required to do what's called a QM, qualified mortgage, and make sure people, you know, we look at their income, we look at their assets. We don't have these no income, no asset liar loans anymore. The other thing is that there were products out there that had been put in place called option arms. And the best way, and these option arms provided an opportunity for people to make a very low required monthly payment on the property and accrue interest on it. And that, in some cases, had them owing more than what they started with. And the best analogy I give to people is think about the credit card bill you get where they say, oh, you can make that simple $5 a month monthly payment, even though you owe thousands of dollars on your credit card. If you choose that, the interest that you're not paying, that you're not keeping up with, gets added to your balance. So that 5,000 becomes 5,500 in a very short period of time, and so forth and so on. So big difference in the market.
The other thing, Brad, that I think is a big part of it is the amount of home equity we in the United States have accumulated. Right now, according to the Wall Street Journal, the U.S. home equity sits at 27.8 trillion with a T dollars. That's a huge amount of money. That's a huge piggy bank, and something that I think bears paying attention to. The other thing is that right now you've got the biggest population going through, I'm going to say through the pipeline that we've ever seen, and that's the millennials. The millennials are starting to go out and in many cases buy their first home, some cases buy a move up home or a second home. That's creating huge demand in the marketplace. And yeah, the inventory from my perspective continues to be low and the demand continues to be high. So I don't see a crash coming.
I couldn't agree with you more. One of the things that let's give this analogy that you gave some legs behind it, so to speak. People, if those that have been in kind of homeowners for a while, if they remember the baby boomers, or if you're part of that generation, that was the largest generation coming through, as Gary put it, as you put it, the pipeline. And there was tremendous amount of home building during that period of time. You could see large subdivisions put in with thousands of homes and such. Well, this millennial population that's reaching home purchasing phase right now, they're in their young 30s, they're bigger. They're bigger than the baby boomers by a good amount. And so there's just not enough homes, and the baby boomers are still around. They're still kicking. They're still living in their homes. So it's creating an inventory challenge for sure.
One of the things that we see is that a number of the homes that we are listing right now, and I'm fortunate in the sense that we've been around long enough, we get calls to referrals to list homes. One of the things that we're seeing is a lot of it is homes that people have died in. I'm not going down the path of, and there's the body outline. You can see it. No. You've got people that have no longer need their homes. Perhaps they're living with family. Perhaps they've gone down south. For whatever reason, the home is vacant and they look to us to sell it. And the conversations typically go like this. I've got my mom and dad's house to sell. Can you help? Well, of course, that's what we do. Happy to help. Well, I'm a little concerned about having you over to see it. Why? Well, it's dirty. There's stuff in it. It's dated. Well, the truth is, that's, in my mind, that's equity sitting there waiting to be tapped. And so we're happy to go in and help people with that. And once they get over the initial, I'm going to say, embarrassment of that, it becomes much more of a collaboration. Now, I will tell you that, there are families where we say, get the jewels out, get the good stuff, get the money out of the house, so that what we're left with is stuff that it's just stuff and it needs to be dealt with. And there are many ways to deal with that. You can donate it. Some people like doing Facebook Marketplace. I'm not a Facebook Marketplace guy. I don't like that process. I don't like, meeting people. It feels a little unnatural to me. But if there are companies that will come in package all the stuff in the house up and then sell it at an online auction. And you don't have to do a thing. And that, I think, is something that makes a lot of sense. So you get the stuff out of the house, you get the house clean. And, some people will say, oh, do I need to update the kitchen? Do I need to spend time on the bathrooms? Well, the answer, generally speaking, is no. If the plumbing works, if you don't have active leaks and all that stuff, then clean it, make it look good, and let people look past that and say, okay, it's going to need a coat of paint. Yeah, the bathroom might need some updating. A number of people actually do like seeing those old blue tubs in the houses.
It's retro. It's coming back, right?
Exactly. And there are people that will go in and refinish those and all that. We could have a long discussion about whether that really works or not. But that's certainly one of the things that's going on. But before we go much farther, Brad, if someone wanted to reach out to you, how would they do that?
Gary, the best way to reach me is via my cell phone, which is 978-375-5531, or they can email me at brad@bradavergon.com. And Gary, how do they reach you?
I can be reached at gary@movewithgary.com or at 508-733-6005. So let's take a break, Brad. Let's pay some bills, and we will come back and continue the conversation.
See you on the flip side.
Stay tuned. More All Things Real Estate coming right up.